Good afternoon, everyone. Welcome to our November financial education event on hunting for bucks. My name is Paul Zarling. I'm the managing partner here. I'm going to introduce our speakers here in just a second. And then for those that come here regularly, you know we like to start these off with a little bit of trivia. And so our trivia today is going to be tax related. And I'm not going to go too far back in time. I know a couple times I've gone way back. But this is actually last year. Last year's tax time. Right? So think about that. So spring of the year. Right? In hours, how long did it take the average American to prepare their taxes? In hours. So I'm kind of giving away a little bit. How long did it take the average American to file their taxes? 34 hours? Wow, 3 days. Oh my. 2 hours. 2 hours?
3/4 of an hour.
45 minutes? 15? 4? Okay. 13 hours. 13 hours to prepare your taxes. Then the follow-up to that is, what's the average American, what do they pay? What do they pay to file their taxes? 250? 0? Okay.
189.
189?
Is your average mean, median, or mode?
I like you a lot, but here's the deal. We're going to go with, let's go with meme. You have a guess?
No.
Okay. All right. So the average person paid $240. So we had $250 over here. Not too far. Not too far. All right. So that's our trigger. 13 hours, $240. That was last year as well. Okay. So I'm going to introduce our speakers. So if we go to the next slide, please. We have Justin Krieger, who is one of the partners here at Financial Planning. Been doing that for 15 years, married, family of 4. Brad Drager, right, been with us for a few years now. Married, family of 3, engineering background. Special guest, Meredith Scheunemann, our financial controller, and also leading our accounting and tax services. And then we have Jake Norlander as well, who just joined us a few months ago as well. So this is the team. We also have another special guest a little bit later, but we'll introduce him when he's ready to go. So with that, I want to hand it over to Justin. What?
So we always give highlights on what's going on in our personal lives. So starting up with my family, Isaiah is in 6th grade. You can see him there with a duck, one of his first ducks he shot this year. So he was excited about that. He's just finished his 2nd year of tackle football. So we had great weather this fall. Like every Saturday was sunny and 55 to 70. Our little guy there is Zev. He loves Halloween, so he was dressed up as a Star Wars character there, ready to go. And then we'll skip down and across to the right to Zev. So that is him at the around Halloween at the Jackson Firehouse at their open house. So he's inside of an ambulance, but he's still pretending that he's on a roller coaster at Disney World, I guess, from June. So he's quite a character. And then we'll go up. So there's a little bit of a backstory there. So that's again at the Jackson Firehouse. Our 10-year-old Asher dressed up as a fireman there, and then down there below cooking French toast, which he had enjoyed. But the fire cooking, he's come a long way since last December when he burned popcorn. Did not fess up to it, and we had to have the fire department come. So we're working on fire safety and honesty with Asher, so thought that was kind of funny. And then in the middle, the two most important women in my life, my wife, Brooke, another year teaching at Kettle Moraine Lutheran, and then our daughter is now a freshman, so she got a part in the fall play, The Trials of Robin Hood. So she's enjoying high school, and so is my wife.
All right, so what we've got here, so the upper left corner, if anyone knows me, I tend to be a little frugal, and Justin always tells me I've got to watch that I let clients spend their money. So the upper left corner is someone that might be in this room and was a proud owner of guilt-free Mustang that I got my picture with her last lunch and learn. So pretty big moment for me to see someone be able to enjoy something. So she said that she really likes that vehicle. Then we go across the top. So Ethan's the oldest. He's playing rugby. That's his friend Francis. During one of their scrimmages, they were put on probation due to some situations at the university. So their rugby team had to do scrimmages, and they were wearing two different colors to play each other. The next one there is Logan. He's actually in the back. He's a surprise visit from Colorado. He's here just through tonight. They already have more snow than us here and has been on the mountains. He's there with my brother-in-law. And then upper right is Colin playing football. And then Lisa and I here in the lower left corner, we went down to South Carolina. As you guys, if you look on our website, I'm the expert at Hilton Head, along with my wife. We just finished a trip there in October. A little bit of Halloween dress up in the middle, and then Colin, joining us to play some golf.
Oh, well, they just let me out of the back room for this special occasion. I don't have any slides. But when I'm not at work, I've got 5 kids. Long story. I have a 19-year-old, and they ratchet down all the way to age 3. 2 of my children are adopted. I'm a strong believer in foster care, so sometimes the number of kids in our homes have changed over time, and sometimes I lose count. But I've never actually lost a child, so your turn.
All right, so this fall we were able to get out, me and my wife and daughter there on the far side. We enjoy getting out and hiking, so we were able to do that with our dog this year, and then you will see our dog guarding our Halloween candy. He only allowed children who gave him head pets to get some candy out of that bucket. A lot of people very excited. He did not like the Tyrannosaurus Rex costume, though. The one that came up to the house, he was not happy with that. Had to take it inside. And then, unfortunately, my truck this fall was the victim of a deer who said YOLO on the highway, and indeed YOLO'd. He bounced off the entire side of my truck, destroyed both of my doors beyond repair, and it is totaled. So that was a good time. And then to just cap it all off, we've got to go to the Milwaukee Public Museum because they're shutting that down in a couple of years. And so my daughter had never been. I had been a lot growing up. That was a huge part of my middle and high school. So we were able to take her for her first visit, and she absolutely loved the dinosaurs.
So I'm going to give you an overview of what we're going over today. So Jake's going to kick it off here, give you some updates on education planning, give you an update on student loan forgiveness, also other options for planning for education expenses. Brad and special guest Meredith are going to go over our tax preparation process, some best practices, and some updates on our process. I will go over some tax planning, also some deadlines and things to look ahead towards, update on some federal programs. Some of it's going to be a review of things I've gone over in the past, and then some important updates for 2023. And then last, Dave will give us an update on our new Adaptiv Select ETF. So we're going to be going quickly because we have lots of things to go through today. As always, if you have a question, pop up your hand and someone with a mic will find you. So from here, we'll go over to Jake.
All right, we're going to go really quickly through a couple of updates around student loan forgiveness, and then just as we head into 2023, we're going to outline some of the ways that if you or someone you know is looking to plan for education for kids, grandkids in the future, some of the options that are available for you. So student loan forgiveness, how did we get here? So the Biden campaign, while he was campaigning for president, ran on a $10,000 forgiveness program for all borrowers. That was a part of his campaign promises. He got into office and hedged on that for a while, held off, wanted Congress to formalize with the bill. Political and social pressure led to an implementation process where he said $10,000 is going to be forgiven for all federal student loan borrowers under a certain income. $10,000 additional forgiveness for anyone who received a Pell Grant to go to school. Now, the question that is always going to happen, is this legal? It's up in the air. There are arguments for and against on the legal side. We don't have any real jurisprudence on this to say definitively whether it is or is not legal. End of the day, the Supreme Court is going to have to decide. Here we have a link for the student loan forgiveness. The application was live. That has changed. We'll talk about that. Some of the rules and regulations on other programs for forgiveness have been relaxed coming into 2023. More to come. Those rules are getting ironed out by the Department of Education. As those become a part of the legal and tax code, we'll get you guys more information. The current state of student loan forgiveness, there were 22 million applications in the first week that the application was live online. Over 26 million applicants total, 16 million already approved for relief. A federal appeals court halted disbursement of relief while they were considering a lawsuit challenge from 6 separate states. The applications were not halted, just the actual relief, and then a federal judge out of Texas ruled that the law was unconstitutional. This put a halt to all applications, so if you do visit that link, there will be a sign there that says this is temporarily unavailable. So we are in the process at the moment of going through this. A Supreme Court challenge is inevitable. If resolved and forgiveness is applied, the big thing for us, student loan forgiveness is a taxable event in Wisconsin. If forgiveness is granted, you will not pay federal tax on it. No one pays federal tax, but in Wisconsin, that is considered a taxable event. Question.
Clarification, said held disbursements. Has there been any actually forgiven?
Not at this time. Yep, nothing has been gone through. The appeals court halted it before the process began because of the challenge, and then the application stopped as well. All right, fantastic. That's where we stand. We'll continue to update as things progress and as the Supreme Court takes a look at this. So as we head into 2023, there are 3 main options that you have for funding education. So if you're looking to fund grandkids' education, children's education, if you know anyone who is looking at that, you have 3 primary options. Your state-sponsored 529 plans. So the contribution limits vary by state, but depending on what state you're in, you can go from $235,000 all the way up to $550,000 per year into this plan. So that's the maximum that you can contribute. The state-sponsored 529 plans, however, they do have limited investment choices. They can be used for K-12 and college expenses. Some of them offer state tax deduction for your contributions. So these have the highest limit, but they are also the most limited in terms of your investment options. Yes?
So what if your grandchildren graduate from high school and don't want to go to college? What do you do with that money you have set aside?
That's a great question. The 529 plan, I believe Justin has an answer for that.
So there's a couple different options with 529 plans, education, savings accounts. You can change beneficiaries to a different grandchild, or it could be anyone. Also, worst case scenario, if nobody uses it for high school, college, trade school, which are all eligible expenses, the worst case scenario is the gains are taxable and there's a 10% penalty. So there's a couple different options.
All right. The education IRA or the Coverdell account. Okay, these have a much lower contribution limit per year, so it's $2,000 per child per year. However, with the Coverdell, you are able to invest in many, many more options. It's a much more open and free platform and account. It also can be used for K-12 and college expenses. There is no tax deduction on this. All right, so it's very similar to the 529 in that it is meant strictly for education expenses, but it is different. It has a lower contribution limit, and you just have more investment options within the account. And then our final major option, the UTMA or the UGMA. Okay. These are strictly custodial accounts for minors. So these have no contribution limits. You can put as much into this account as you want. There are complete freedom of investment choices. Can be used for any expense because it's a completely open and free custodial account. However, some gains may be taxed. Up to $1,100 in gains per year is tax-free. After $1,100 in gains, the child pays the parent's tax rate. So you get a lot of benefits from it, but they will take their cut of taxes if there is a lot in there and if it's gaining a lot of money year by year. There is no tax deduction, And the child does assume control of the account at the age of majority for their state, which is 21 in Wisconsin. So at the age of 21, anything that is in there is now the property of the child. And while money is being funneled into the UTMA or UGMA, it is there for the child's benefit with the parent or owner as a custodian for them. So those are our three major options as we head into 2023 for funding children, grandchildren, education. Are there any questions about any of those? Hearing none, I'm going to pass to Brad and our excellent guest speaker, Meredith.
All right, thanks, Jake. So we raise a hand. How many people love tax season? Well, that's good. So we've got some people that are excited. Others are like, this is just something that we have to do. We love it on our side. It's a lot of fun. If you come in the office, you're always going to hear me say, it's a great day. We're in tax season. So this is our process. You can see, the way you gather your documents, you're going to get our organizer. You're going to drop them off. You will find Sarah, Heather, and then we also have an intern, Maya, that you might see in the front as well. Always ready, always filing. If there is a line, be patient. And if your driver's license expired in the last year, we're going to need a copy of it. Why, Meredith?
IRS wants to know who you are.
Can't e-file without it. So we need it's the expiration date that we need and a picture of the copy of the license. So the tax organizer is organized similar to your tax return, so not a ton of surprises there, but we'll break down into each specific area. So the income section is where you put if you have a W-2 wage, your Social Security, but just some other things that are coming as of late. I don't know if anyone owns cryptocurrency, but that is a taxable item. We also have Venmo and PayPal. Those are these online platforms, and they started to come out with a form called a 1099-K. If you get one of those, bring it to us, and we can handle it. What if I sell a home, Meredith? What should I do?
Lots of home sales this year, right? Hopefully profitable ones, but if you've lived in your home for 2 out of the last 5 years, it's a tax-free event. But you do want to bring us the closing statement so that we can pick up real estate taxes and we can make sure that the accounting for the sale was in order and that you do not have to pay taxes on that sale.
And then just a little tip on the right there is as you're going through each line in your organizer, just give us that idea that you've gone through it. So checkbox, line it out if it's no longer applicable for the year, because that's based on everything that you had the year previous. All right, so deductible expenses. The first one is, so some people drop us all of their medical receipts. Think of it this way. Maybe you don't understand the concept of a 7.5% floor, so I'll make it simple. Let's say you make $100,000 of adjusted gross income. Your first $7,500 of medical expenses just gets you to the floor. None of that's deductible. If anything above that is where you would get a deduction. Am I correct in that, Meredith?
You are.
All right. So if it's less than what your normal, what you think your adjusted gross income is, we don't need all of those receipts.
Right. But while we don't want the receipts, I would suggest that you go ahead and total up those health expenses and just put them on the organizer for us, because oftentimes what we can't take for federal, we can take for Wisconsin, and we want to make sure we get that benefit for you, but we can't know it, or we can't do it if you don't have that total. So no receipts, but go ahead and total up those medical expenses.
That's good. All right. So Meredith, what if I was at the casino and I won $20,000? Can I write all that off?
Yes. No. No. You won? You won $20,000?
Just clients have done it. I haven't yet.
That would be a taxable event. If you're heading out to the casino on a regular basis, there's a good chance you've got some losses in there. Remember, those losses cannot be used against that income unless you itemize. A lot of us in this room aren't itemizing anymore. So just keep in mind that income is taxable, but those losses cannot be used against that unless you itemize.
Government always gets their money. Charitable contributions. Just So those of you who are who have an IRA and might be using a qualified charitable distribution rate that reduces your taxable income, 70 and a half is the age for that. So think about that if you're charitable and you're getting close to that threshold, that's where that is. And we need you to track that specific amount. Meredith, what if I start buying raffle tickets? So can I deduct it?
Yes. No. Sorry guys. No raffle tickets. So it's wonderful that you're spending the money on the raffle tickets. They're for a good cause, but we cannot use them as a charitable deduction. And going back to the qualified charitable distribution really quick, if you are taking advantage of the QCD out of your IRAs and you are a unit of 2, make sure that you are tracking the distributions that you're taking per statement on your organizer. Okay, so health costs, charitable costs, we want totals only, but on that QCD distribution, we need to have those marked separately per qualified charitable distribution.
There's a question here. Amy?
Charitable contributions, meaning donations to like Goodwill and family sharing and stuff. Is that what that means? Or
That would be the overall bucket. If you're talking about Goodwill, that's different than what we've got kind of here. But
okay. Because I was going to say, I thought we always needed to like have receipts of what we donated when it's like that kind of donation.
Absolutely. For the record, for your records, you need to have receipts. For our records, we don't need to have the receipt. We just need to have the total. But for your records, please keep it in the file.
all right.
If we're having it taken out of our IRA, but you're doing it for us, do we need to track it?
So the question is, Client First is handling the qualified charitable distribution. Does the client need to track it, or do we already know? Justin, do you want to reinforce this one?
Yes, we need you to track it also because so TD Ameritrade, a qualified charitable distribution is reported on your tax return. But the 1099 from TD Ameritrade it's just like any other distribution. So I realize this is a very common planning technique that we use with a lot of our clients, many of them in the room. But there's no good way for us, we can't pull a report and just bring it up. So it's much, much easier. You might have set it up in a planning meeting with myself or Jake or Brad, but it's much easier if you just put down $200 a month out of your IRA for the year, and then we could go back and double check that, but we need you to document it yourself on there because we have to go back and basically manually look through the statements the same as you would. So we do need you to write that down as well.
All right. Yes, Donna?
Now, this contribution, does it need to go directly from the IRA to you don't take the money out and donate it. It goes from the bank to the charitable.
Yep. So the question we had was, if I take it to myself and then take it to the charity, is that what we're talking about? No. And it's actually, so there's a form, and TD Ameritrade in our case would send it directly to the institution. You sign the form and it goes. All right. The required questions. We need you to check these off. One thing that gets snagged. We had a couple of these last year. Meredith, can you talk to me about the PIN?
Sure thing. So if you are concerned about identity theft or you've had to unfortunately participate in identity theft, sometimes you can ask the IRS for a PIN. It's an extra measure of safety to make sure that your data is secure. If you have been issued a PIN, without that PIN, we cannot e-file your tax return. So it's really important that you keep track of the PIN and that you provide it in your organizer at tax time. In the event that you don't have the PIN, if you had applied for one previously and we can't e-file your return, that means we're mailing in a paper copy. I think that the IRS is still dealing with paper copies from January. So if you're expecting a refund and we have to mail a copy, don't count on that refund anytime in the near future. So if you have a PIN, get us the PIN.
Tax schedule. So anyone who has a business that you might have or has rentals, you would be using Schedule C or Schedule E. If you need the worksheet and we didn't provide it in your organizer, just give us a call. And we need, so Meredith, maybe it's a good question. Should I just print out my Excel spreadsheet and give it to you?
No. Now, if you haven't gotten the worksheet from us and we haven't prepared a Schedule C or a Schedule E for rental properties for you previously, give us a call. We will get the appropriate worksheet in your hand. Again, much like charitable deductions, much like health care costs, we just want the totals. The exception being, if you have a small business or a rental and you're purchasing some fixed assets, you're purchasing a lawnmower or some other big ticket item, in that case we do need to have the date of purchase and what it was. So if you're a business owner or a landlord, the fixed assets, we need those itemized. But other than that, all expenses can just be totaled in the appropriate category. And again, we have a really nifty worksheet that we can provide you so that the information can get to us efficiently.
Minister of the Gospel, this is a designation for called workers in some of the various denominations, and so we do a lot of these returns. Just a good reminder, the expenses you can deduct. So anything that you use in your housing allowance, it's called. I like to call it housing deduction because they get a little mixed up. But everything that it takes to put on a home is deductible, so you're not paying any federal income tax on that. So make sure you have receipts and you get a worksheet for that. And then the last piece there is if you do have any unreimbursed employee expenses, we have a place to deduct those as well. And now, as we think about dependents or some personal information. So, Meredith, if we have a death, what's some good things we need?
If we are dealing with a situation where a taxpayer has passed away, we definitely need a copy of the death certificate. If that individual had a trust set up while they were living, then we would like to see a copy of the trust document as well. And then at some point, if we also need to file a trust return, we will need to have the beneficiaries, their addresses and their social security, so that we can forward the information that they will need for preparing their tax return when they file.
And if there was a divorce throughout the year, we need the divorce decree, and then there's a form if you're going to be alternating years on claiming the children. It's the form 8332, and that needs to be signed by, I think is it both people?
It's the individual who's giving up the dependent on the tax return for that year. They need to sign. Little tax tip, if this is your situation or someone you know, those forms can be filled out for multiple years. So sometimes we don't have friendly terms between parties. If you get that form filled out for even years or odd years, then we can reduce the amount of times we have to go asking for that form in the future.
All right, good. And then this is one, a lot of your planning clients, we have a lot of dependents in the household, and I guess the best way to describe it, well, Meredith, as we look at a full family in credits, how do we handle dependents?
In terms of education credits, so as part of the organizer, there is a sheet that lists, you have the opportunity to list your dependents, list how old they are, list whether or not they're in school, particularly college. That's all really good information that we need in order to make sure that we can get the right credits. If they have been attending college, we want to make sure that we understand how many times previously they have taken the American Opportunity Credit as an example. So the more data you can give us about the dependence on the return, the better off we are to get those credits available to you when you file your return. Regarding dependents, one more thought. If your dependents are working and they have W-2 wage, we want to make sure that if they had withholding, that we can get that back for them, or we can provide you guidance to get it back. So I would strongly encourage also that any dependents you have, if you could just forward their W-2s as well, so that we can just make sure that we're holistically planning, not just for you individually, but for your whole family from a tax perspective.
All right, that's good tips. So we're coming in for the delivery meeting. We got 30 minutes. We review that entire return. We need signatures. So both the taxpayer and spouse, if that's your situation, need to be there to sign. And we prefer check and or credit debit card. So good reminders there. And I think then we're kind of coming back to the rest or the wrap up of this. Any other points to reinforce, Meredith?
You didn't let me tell any of my jokes.
Oh, that's right.
I got some jokes. I had like 3 jokes. I don't have time for the jokes anymore. I'll give you one joke. Paul made some mention about the historical data of the 1040. The 1040 was actually originally created in 1913. Things have gotten a little bit more difficult since then, in hindsight. But does anyone know why they called it the 1040? No? Because for every $50, you get 10, they get 40.
All right, and with that, we're going to hand it over to Justin. He's going to talk to you about tax opportunities in 2023. Oh, we had one, yep.
Yeah, so Morgan did our taxes last year. Is she going to be returning for tax season or not? Who do we contact?
Ooh, it's a good question.
If I have anything to do with it.
Yes, she has not delivered, but yes, so Morgan will be back for the tax season.
All right, some of this I went over last year. We're going to review it because it's great planning material and ideas. So getting your food plots ready if you're a deer hunter. So in the financial planning world, these are things we need to do by the end of the calendar year to be effective for that year. So 401k contributions, Roth IRA conversions, qualified charitable distributions, take your required minimum distributions, donating things to charity, selling taxable assets and accounts, and then paying estimated taxes. So these are things you need to do during the calendar year to plan for that year.
Justin,
Yes.
don't you have to pay the self-employment income tax by the 15th of January?
Correct. So that's part of the estimated taxes. It's included in the last point on there. Correct. Yes, to avoid penalties and interest. Other things, it's take into consideration, take advantage of energy credits, tuition credits, dependent care. I don't have this included. There are some new energy credits I covered at our Lunch and Learn in September that go into effect next year. So we'll have updates on those in the future. Setting up your tree stand if you're a hunter. So this is a lot of what Brad and Meredith went through. So the tax preparation process, getting all your final information together, filling out your organizer. And what can you do? So opening day, try to get that big buck. What can you do on the last day or essentially when you're preparing your taxes? So these are things you can do in the following calendar year for the prior tax year. So you can do things like make traditional and Roth IRA contributions as well as SEP IRA contributions, contribute to a health savings account for the prior year, which reduces your taxable income, also contribute to 529 and education savings account accounts for the prior year.
Justin, you show 2022, you mean 2023?
Correct. Yep. That's my typo from last year. I didn't update it. Thank you. And it is, again, is it the 15th this year, Meredith?
No.
Is it the 17th?
17th.
April 17th, 2023 is the tax filing deadline for 2022 taxes. All right, we're gonna do a review of some of the recent tax law updates. And I'm just hitting on the large points. So the Tax Cuts and Jobs Act signed by President Trump in 2017 went into effect January of 2018 for the 2018 tax year. So the main things that were affected here is we reduced income tax brackets, so that 15% went down to 12, 22 went down, 25 went down to 22, as well as the small business tax deduction of 20%, and enhanced child tax credits of $2,000. So really the people that were most impacted was families with children, and then working and middle class people making up to about $100,000. So about a 20% tax reduction for all those folks. What other note? Those are the main things, some other things going on here, but as a reminder, this is the most important thing. Went into effect January 1, 2018. It sunsets at the end of 2025. So 2026, regardless of what Congress does, we're going to have a new tax environment. Either this is just going to sunset back to the old, smaller standard deduction. If you're itemizing personal exemptions, if you remember those, it's either going to sunset back to that or they're going to pass something new. So we know the tax environment is going to change at that time. Brad, Meredith, and I were already having discussions this morning of possible planning techniques starting in 2026. We don't know what exactly it's going to look like, but we're going to work on what's in the best interest of our clients at that time. So this is just all the details on the Tax Cuts and Jobs Act. So 2019, so this gave new IRA rules, 401k rules. This is a permanent law change, so there's no sunsetting. So what they passed here is going forward. And the chart here, I'm just going to emphasize the most notable items. So the most impactful things are having to do with required minimum distributions for people that have traditional IRAs, 401ks. So they raised the age you have to start those from 70 and a half to 72. And then they also, you used to be able to create a beneficiary IRA if you were a non-spouse beneficiary and stretch distributions from these accounts over your life expectancy. Now that, as some of you know, that is now a 10-year window. So you cannot, if I would inherit a beneficiary IRA from most likely one of my parents, I could now not take distributions over my life. I'd have to take full distribution within 10 years. There are no minimum required distributions per year during that 10 years. It's just by the end of 10 years after the year the person passed away that you have to take it completely out of the account. So those are the biggest things that are included in 2019. Definitely some other things, but those are the ones that impact the most people. So here you can see the different beneficiary options. All right, so you may have heard some of this in the news. Will there be a Secure Act 2.0? There's talk of it. It's actually working its way through Congress. So there's an approved House version. There's 2 versions in the Senate. Nothing is passed as of now, but here's some of the things that they're talking about including. So they just increased with the Secure Act 1.0, they increased required minimum distributions first year to when you turn 72. They're talking about upping it to 73 or 74 or 75. Also increasing catch-up contributions by up to $10,000 for people who are closer to retirement, allowing employers to make Roth contributions So right now, if I'm putting money into my employer's 401k plan, if I'm making Roth contributions, everything from the employer side is required to be pre-tax traditional contributions from the employer. They're talking about the potential of employers making Roth contributions. Also some provisions for employees to still get like the match, even if they're not putting money into the 401k, if they're paying off student loans. Also expanding access to 401ks for hardships, disasters, adoption, long-term care insurance. So just decreasing penalties for some of these specialized expenses. Also, some type of savings account option where you could put up to $2,500 a year, and then anything above that would go into your 401k, but that money would be available for non-retirement things. So they're just trying to incentivize people to save. And then automatic. So currently, if a business sets up a 401k plan, they have the option as the plan or the employer to make it mandatory or auto enrollment to the plan. That's not a requirement that they do that in the plan. Many employers do, but they're talking about making it mandatory for all plans. So probably something coming here, but nothing is passed as of now, but here's some of the things. So I've had this question come up. Hey, did they increase required distribution age to 73 or 74? So it's in some of these proposals, but it's not passed yet. All right, so I hope all of you are still awake after that great meal and 2 or 3 desserts that I saw you guys have. But so for the last part that I'm going to go over, so make sure you're awake because I got my last 2 slides are really good news. So many of you already know this. Social Security is going up 8.7. So we've had inflation from this year's increase was 5.9%. So just some examples of what your benefits would look like next year. So that should be 1,087. Yep, that was a typo. Good catch. That'd be great.
Yeah.
Over 100% increase. Yes. Let's see. Maybe we'll see if we can get that passed by Congress. Just for client first, clients only. Can you increase your $1,000 benefit to 2,087? Good catch. So that will help offset inflation for people collecting Social Security. Also reinforces, some people have chosen to delay their Social Security till a later age. That's really helpful when those larger delayed amounts are increased. And then finally, so that was impactful for people collecting Social Security. This is more impactful for people still saving. So again, the government reacting to inflation. So this is a chart that shows the history of retirement plan contribution limits. So they're upping the standard 401k contribution limit up. You can see to 22,500. So they're increasing it by 2,000. So you can see all of the contribution amounts increased, which is awesome, including just your IRA, which includes Roth IRA contribution. The base contribution limit is going up from 6,000 to 6,500. So all of those contribution limits are going up, which is great news.
Question?
Yes.
Going back to the cost of living, on Social Security, they have a number, but what was the actual cost of living, say, for 2020?
Well, they've been tracking that every month, so they track it from the month the prior year, and that, what was the last month? I thought it was like 7% from the prior year. So they're
7.7.
7.7
was from the prior, so they look back 12 months.
So 7.7 was the prior year.
Correct.
So the increase is what?
8.7.
Okay, so then that
So they
more or less even with the prior year, but that's not helping today.
Right. So they're trying to annualize it and estimate what it would be for the whole year to calculate next year's. Correct. Yes, sir.
Will they advise what the Medicare deduction is?
The Medicare
Premium Medicare.
That is,
Take care of it.
I don't know if they released the standard Medicare Part B premium out yet. Did that?
164.
Oh, it went down.
Yeah.
Oh, it went down. That one I didn't see. So it was 170.30. So he's telling me it went down. I didn't see that figure yet. All right, we're ready for you, Dave. So this is a really cool development. We've been working on this well over a year, and so I'll hand it over to Dave, and he's got a mic already.
I use my hands a lot, so it's best I don't use a microphone because then it goes flying out of my hands. I feel a little odd being up here without an orange vest. So forgive me.
You have another one.
I need a clicker. So I brought this bag up here. It's a really cool bag. It's not orange, but it's pretty cool. It's got some stocks in there. How do you get one of those bags? That's funny you should ask. Now you got to wait until the end of the presentation because you all get a bag at the end. Well, maybe not all. It's first come, first served. There's a box back there. I know. Don't worry. We'll make more. So we're really excited about the hard work that went into what we're announcing right now. How many of you received something in the mail or saw an email, a press release regarding the exchange traded fund? Awesome. So we launched the exchange traded fund, and it's a love story. It's about our clients. That's why we did it. And the reason why we did it is exchange traded funds have a different tax loophole than if you invest just regularly outside of an IRA. So consider investments outside of an IRA, right? So inside of an IRA, you transact, you trade stocks, you sell stocks, you buy bonds, you sell bonds. The taxes are deferred till later. Outside of an IRA, treated differently, correct? Capital gains. And that's been the big theme today is taxes. You have a whole team. I hope that you're all impressed with the amount of tax expertise that we come to bear for our clients. The reason why we built this is for the same exact reason, is for tax purposes. Because these stocks in this bag, let's call this bag an ETF. The stocks in this bag, if they were sitting outside the ETF, would be treated differently than inside the bag. The IRS lets us do certain things within the bag. In fact, 7 different ways to create custom baskets to buy and sell securities, both of the bag itself or the stocks inside of it, that help reduce potentially the tax burden on our clients. So that's why we built what we built. Now, I have to present, look at all this language. You have the document. You can read through it when you need to go to sleep at night, but I have to provide it to let you know that I'm not here to solicit you. I'm not trying to sell you this ETF. I'm just here to inform you and educate you on what this ETF is and how it's a benefit to our clients. Obviously, investing involves risk. If you want to find out actually more about the ETF itself, you can, but what I'm going to cover is going to be sufficient. Really, like I said, it was a labor of love. Okay, this particular bag, I think was about $3 or $4 to make. Maybe take that times 100,000, and you'll get a feeling for what we spent on behalf of our clients to get an ETF bag for our clients. And it fits under how we manage funds, how we manage assets for our clients, the adaptive piece of the puzzle. And so why did we do it? Simply because we want to help potentially reduce the tax burden of our clients based on what's happening with inside the exchange traded fund. What are the 3 key features of the fund? It seeks to identify the top 25 ranked stocks. So inside this bag, there's a formula. Inside this ETF, there's a formula that's running every single week. And it's taking 1,000 of the largest stocks on the U.S. stock exchange within U.S. markets, and it's ranking them based off of 2 characteristics, momentum and relative strength, something most of our clients are familiar with. It takes the top 25 and puts them in the ETF. However, not all market environments are the same. When the formula inside the bag, inside the ETF says, hey, the broad market's in the downtrend, it's going to be really hard to own those 25 stocks. It shifts to T-bills and cash. And then it does this on a weekly basis.
So here's the description of what it's doing. Every Friday, we run through a process on our team. At the close of Friday, the data starts to come in and we can run our ranking system. We provide this information to one of our trading partners called Exchange Traded Concepts by Monday morning to execute what has to happen inside the ETF, the Exchange Traded Fund. If we're in an uptrend, we're going to own the 25 top-ranked stocks. If we're in a downtrend, as indicated in this, we're going to own cash and T-bills. You might guess what we're in currently within this bag. There's not actually stocks in here. There's T-bills. So right now inside the ETF is T-bills for our clients. Again, this is the basic methodology. Huge universe of stocks. We apply a formula that are the two most important factors in investing over all time horizons, and that's momentum and relative strength. Narrow it down to 25. Reconstitute the ETF every week. When something falls out of a predetermined ranking, when it falls out of that, we switch another stock in for the stock that's leaving. And there's ways that we can do that that help us handle tax efficiency, right? Because if we own a stock for 20 years, outside of an IRA, outside of an ETF, there's some tax considerations there. But if we do that process with inside an ETF, it's treated a little bit differently. So it also allows us to incorporate it in different models. Okay, the clients know that we buy and sell individual stocks within Ultra Growth, but we haven't been able to do that within Growth, Moderate, and Balanced in an efficient way. This ETF allows us to do that, to be held in those different models to reduce the taxation for our clients. So that concludes my update on the ETF. We are very excited for it. Some of our clients have started to see it enter your account. It's listed on the New York Stock Exchange, but really it was built for our clients, and our clients will see it slowly enter into their accounts. And again, if you're leaving today, to remind you of the ETF and the benefits of the tax efficiency of the ETF, take a bag with you. They're in a box in the back as you walk out the door. Thank you very much.
Thank you, David. Yeah, the bag's all ready. Heather and Sarah can help you with those. Like I said, we'll make more, so they're pretty cool to use for all your Christmas shopping. All right, so you got a feedback form. Thank you. Please complete that. You can also hand it in to Sarah, Heather. We love to get your feedback both on the content, how it's delivered, and if there's areas where we can help you, let us know. Because it is all about our true holistic financial planning process and helping you secure your financial confidence. So this year we've completed 11 education events. This will be our last one for 2022. The next time you'll see us, we'll actually be right here. We're going to have our Christmas open house for our clients, so look for an invite there. There'll be 2 opportunities to join us, one over the noon hour and one in the evening. And then we will kickstart our education event for 2023 in January. So the dates are set. We're still ironing out a couple things on the topics, but look for that on our website, probably here before the end of the month. So you'll see that. If you're new with us, or if you're newer to us, or something like that, if you need some help, just call our office. Let us know how we can do that. Whether it's tax, estate planning, investments, Medicare. I know it's open enrollment there till December 7th, I believe is the number for that. And lastly, I'll say before you go, I do have a clarification on tax day. The delicious irony of the whole deal is Patriots Day is April 17th. Tax Day is April 18th. So if you want to go throw some tea in Lake Michigan, you can do that. I just thought it was so funny back-to-back days and how they set that up. So April 18th. So for us, we'll only be taking documents around April 10th. I think it is the day after Easter. So get your stuff in a week beforehand, because after that, can't help. All right? So enjoy it. I don't know, are we getting any more snow? I think we're okay. Right? Drive safely. Hey, enjoy your time. If you're driving a little bit for Thanksgiving, drive safely. Enjoy a lot of time with family and friends. And looks like all the dessert's gone. Good job, guys. So you're good to go. Have a good afternoon.